What is up, guys? Your boy Cash and Pips here. Hope you guys are having an amazing day. So we're going to be taking a look at gold today and just going over the smaller time frame entries and how we're able to break down these higher time frame points of interest and get these precise moves on the 1 minute, 5 minutes. So currently looking at what price was given us in this particular area, you can see that we created a range. All right. On the hourly 4 hour, this just looks like consolidation. It's just sideways movement, but if we're able to break it down to smaller time frames, we're clearly able to see this higher high up here. We never break structure, right? Once we make this high, we respect this high after breaking structure towards the downside. In terms of the 5 minute, we broke below this previous structure, all of this previous structure in here, but more particular, I would have just looked for a break below here. But we can see that we continue to get that bearish rejection after capturing liquidity in this particular area. Then we get retracement all the way back up into this last up candle before the down move, and you can see once again we slowly get the same thing. We break structure in this area, we create a lower low. If we were bullish, we would have continued to make higher highs. Understanding overall, we're bullish, but in terms of what we were doing, you can see that we were just creating a lot of consolidation. But on the 5 minute, we were respecting a valid structure. So just seeing how price continued to play out, you see that we immediately leading into this London session, we captured liquidity, understanding that throughout the day, the Asian session, we started off, we induced some buyers into the market in this area, understanding what's laying below the top and bottom of these areas. Lots of liquidity, lots of money. So understanding that when we create this range, we just move sideways for a day. We have a lot of buyers and sellers getting into the market. So understand where we come down to with this candle. You can see that we got a rejection off this wick. Typically I look for the body plays. We just missed the body off that candle, but you can see once we continue to push up here in terms of the hourly time frame, it just looks like price got a little bit of a rejection. We didn't quite engulf to the upside, but then being able to break it down to the 15 minute, we're able to see, okay, we broke structure in here. Once we got close above here, understanding immediately once we close below this last lower high, what do? We get retracement back down into this imbalance area that we have before we continue to pump price in the opposite direction. So just being mindful of the smaller time frames. Typically you'd want to see price continue to run exactly how it did. So breaking it down to the smaller time frames, in this particular case, what is the most appealing in my eyes, right? To me, this 15-minute candle down here makes sense in my eyes as well. Just understanding that we came down here previously. To me, this IPA has been filled, right? We traded within this imbalance area. We didn't quite create an imbalance because immediately after we came back and traded throughout about 80% of this candle. So understanding what I typically look for, I like to take my fib and I like to get in at the 88.6 to that 100% hold level. That's personally where I like to pull the trigger, because we're able to get essentially the smallest risk on particular entries, right? So in this particular entry, could have been risking 9 pips to be to be really conservative, or if you wanted to let it breathe a little bit, you could have had your stop loss either at the open of this candle, just so if we did come a little bit past 100%, you wouldn't get tapped out, as well as just even this low, this last 15-minute low. Then kind of scaling up, looking at 30-minute and even the hourly, we can see that we create an hourly point of interest as well. So that's what I do. Next, we look at the hourly, 15-minute, 30-minute, and just kind of find where the imbalances lie, right? Where the insufficiencies lie. So in my eyes, smaller time frame, even in here, this would be ideally a low risk scenario, but now being able to, understand the hourly point of view, right? That retracement that we look for in terms of um, discounted fib levels, right? Understanding that we're getting that retracement into that 88.6 100 whole level. So that's ideally, where I like to get in, just because in gold in particular, I'll find that we'll mitigate off the 100%, of these candles, off the bodies of these candles, more times than not. And even breaking down these wicks to the smaller time frame, that's why I like to break down the wicks, just to see if there's anything just potentially valid in those areas, just to understand, okay, maybe I need to let price breathe. If you get in here, you'd have a 15 pip stop loss, but then understanding where this candle is, you might let it breathe a little bit more, like I said. But ideally, based off of how we filled in here, this is where, the max risk would ideally be, based off of price action. So looking at just the way price reacts as we continue to, push up into here, you can see we get a little bit of a rejection into that imbalance. And then leading into this New York session, we start to consolidate again, coincidentally, right at these highs. So what are we doing now? We're inducing more sellers into the market, more buyers into the market. As a result, more people are getting trapped on the sell side, not understanding the higher time frame points of interest, not understanding just even seasonality and how we should be approaching the markets. So looking at how the day closed, into Asian session, we, started to get a little bit of retracement to the downside, right? Then leading into this London session, you can see, what do? We immediately hit out all of these sellers who were previously selling the last 2 days. We hit a lot of their stop losses, as well as activating a lot of orders that are sitting above, buy stops, etc. So understanding, how this candle comes down immediately, and we we essentially trap, anyone who was in the buy, who had buy stops set here, or just felt like they missed the buy, they would have been getting in ideally on the retest of this previous structure. But you can see that we ended up coming lower. We filled this initial imbalance, and you can see that we did get a little bit of a rejection. So in these particular areas, like I said, gold will typically fill 100% of the candle more times than not. When we fill imbalances like this, especially during London, we can expect, unless we really just run, we break structure on the higher time frames going into the New York, well, I'll ideally get another re-entry throughout the day. So you can see that immediately the next hour, we start to get a little bit of bullish movement. Then immediately the next hour, 7 o'clock, right before our New York session, we come into the 50%. So you can see that, we missed this potential entry. So you think, right, understanding gold, like I said, will give you multiple chances to re-entry. So being patient and waiting for the best opportune entry to cut down your risk is the best idea, right? So we can see that we even push down, we induce more buyers into the market. People would have gone up maybe a quick 70-80 pips before then running price out again right at 10 o'clock, literally impulsively capturing, all of these orders. Anyone that got in late into the buys here would have essentially got hit out due to the fact that their stop loss would have been too tight. So we can see in terms of 5-minute what ends up happening, even the smaller, going to the 1 minute. So initially, I would have looked for a break above this candle, or actually, let me get rid of this. I would have looked for a break above this candle, which we did get here. Then you can see once we broke above, this previous lower high, we come back into this imbalance area on 3-minute, 5-minute. We have some IPA on the 5-minute, 3-minute, as well as the 1-minute. You know, you can see we come back down and we fill, you know, just whatever insufficiencies we have in there before continuing to work price up. So we can just see how price, right, continues to walk up. And now in terms of re-entries, where's the next clear point of interest? This 5-minute candle, right? So understanding how small this 5-minute candle is, you know, it's only 10 pips. So even playing the open of this candle, you know, wouldn't be particularly a bad thing due to the fact that it's only 10 pips. So 10 pips is truthfully, you know, not that much, especially in a situation like that. So understand, be impatient, you know, is key, because you can see what we start to do. We start to create another range on the smaller time frames, create liquidity on both sides. Right, and where do we come down to? This last down candle before the up move, you know, you would have been risking maximum 16 pips. You can see we come into the body. We just quite missed it. You know, we hit the 50%. That's still, you know, an amazing place to get in, especially off of this candle. Like I said, the risk was very minuscule. So just seeing how price reacts, you know, and understand this is during market open. This is during an Asian session where typically the markets are a little bit slower. So just seeing how price reacts again. What do? We break structure in this area. Then now we get retracement back into this last down candle before, you know, we got that push that broke. And then we see how price does the same thing. It's a staircase. It just continues to walk itself up. So just looking at current targets, right, an easy 1 to 3 in terms of risk reward would be there, but understanding the overall higher time frame bias, right, we're still looking for liquidity here to be captured and even these highs to be captured. So seeing, right, initially how price reacts after, you can see into this Asian session, we continue to just run, right? We continue to run, and this is ideally what you want to see in terms of bullish rejection in the direction that you want, right? We watched us, you know, come back into this higher time frame point of interest, accumulate. We created a lot of liquidity. Understand these wicks induced a lot of people into the markets. We ran out a lot of orders before, you know, continuing to close the market essentially where we were at prior to, you know, these quick moves down. Then just looking at higher time frame points of interest, right, in terms of liquidity, that 200 pips would have been an ideal target, and just seeing, you know, how we got there, right? This trade would have taken approximately a day, maybe a little bit more than a day, to hit that 1 to 12, risking about 16 pips. Understand we faced really little to no drawdown in this particular area, but it was understanding overall what the market was giving you in terms of higher time frame, smaller time frame. We were able to understand, you know, we were bearish leading up until here. We got a break, we got a little bit of retracement back down, filled imbalance, filled a higher time frame IPA before flipping again on the smaller time frame, breaking structure towards the upside, then creating, you know, these points of interest on the downside, you know, for us to come back. Understand that we created imbalance right above these areas as well before we came back down, and prices slowly just started to walk away after this area. Understanding that metals from about February onward are relatively bullish, you know, based off of seasonality for the majority of the year, especially understanding where we are in terms of current price action, right? You can see that we had these highs here, but even looking at how, you know, price reacted into there, you can see that we came in, we took these highs, right? So overall, gold is at all-time highs currently, but just looking at this particular example of how price just, you know, walked its way up beautifully, this is ideally what you look for. You look for higher time frame points of interest, so higher time frame imbalances. All right. Smaller time frame institutional areas. So the reason why we say areas, because that 1 hour to 1 hour 30-minute institutional candle that you may see on the 1 hour could really just be a series of 5-minute 15-minute candles that kind of lead you to a more precise entry point. So that's why, you know, I say institutional area, because, you know, yes, it could be one candle, but if you break down that one candle to, you know, a 15-minute, like if you break down an hourly candle, for example, to a 15-minute time frame, you would see 4 candles that make up that one hourly candle. So I look for the higher time frame IPA slash imbalance, and then I look for smaller time frame institutional areas within that, as well as just looking for these ranges that we create, because typically we'll create a lot of liquidity before we move, so we'll kind of move sideways before we really get that up or down direction. So it's just looking for the higher time frame structure to confirm which overall direction that we're going to be headed in, understanding that right now metals are very bullish, so looking for longer term sells at this particular moment, you know, isn't ideal, just due to the fact that we've really been running. The volatility has increased significantly. You know, we're currently at 1944, you know, all-time highs was 1921. So, you know, there's really no stop in sight in terms of where the market, you know, could potentially keep going to. But this was just one particular example of how you can correlate the higher time frame, the smaller time frame. Once again, just understanding overall we're bearish, lower low, lower low, lower high, lower low, just literally running down, running down. Then we get a break in here, consolidation, we create this range, sweep liquidity to the downside, fill imbalance, mitigate off of this candle, this last hourly down candle, before continuing to break to the upside. You know, in terms of hourly structure, once we close above this candle here, we broke back bullish towards the upside. So this close just confirmed bullish structure. So once we make a new higher high, you know, we can expect us to retrace back down, which we did back into this last hourly point of interest, 15-minute point of interest, before we accumulated. We were there for not that much time. You can see that there's a lot of wicks before we continue to consolidate and then push price towards the upside. So really being patient, being disciplined, understanding what confirmations you're looking for in terms of the smaller time frames and the higher time frames, and how you can correlate them, because even on the hourly, you can see we had an imbalance in here in terms of structure. We never got a close below this 4-hour candle, so paying attention to 4-hour structure, you know, that could have helped you a little bit in there as well. Even 2-hour, right? 2 hours is kind of the same thing, a little bit more clear. So you can see, you know, we came filled IPA, but these wicks, right? Understanding if you're playing off of these wicks and you're just entering off the bottom of the body, you know, that's about a 70 to 80 pip risk. You know, not being able to break it down to these smaller time frames to see really what's going on. But you know, that's gonna be it for this particular example. I hope everyone is able to take something away. You know, with that being said, I hope you guys have an amazing day. Take care.